We're talking about the latest financial headlines, and we're joined now by financial expert Chuck Zodda from the Armstrong Advisory Group. And Chuck, once again, thanks so much for joining us.
Absolutely great to chat today.
All right, so first off, let's talk about tariffs. President Trump just announced two more deals and finalized a third with Japan. And this as the EU pushes back and says that it plans to hit the US with a 30% tariff on billions in goods. How are these or are these affecting the stock market?
Well, we're not really seeing any kind of downward movement as a result of these. In fact, as these deals are being announced, we're still seeing some slight upward drift in stocks. We actually had rumors today at about 11:30 that the US and EU are nearing an agreement now that may end up having them at a 15% tariff rate rather than the 30 that you mentioned that's been threatened. So I think ultimately, at this point, markets are taking an optimistic approach to this, basically saying, hey, at least some of those higher numbers are off the table. And then we'll see where the chips fall when we actually get into still these higher rates. Remember, we're at a baseline of 10 right now. So whether you're negotiating 15 with Japan or 20 with Vietnam, those are still higher rates than where you were previously. And the market will kind of say, hey, let's see what the data shows once those higher rates start to kick in, because at least the threatened rates, 30, 40, 50% are off the table apparently.
Is there a fear that the stock market is not really reflecting what's happening in the economy and we could see a huge drop again?
So, two different questions. I think there is a realistic fear that the market might not be reflecting exactly what we're seeing in the economy, just because the June economic data only started to show signs of tariff impact in it, and that's likely to build in the coming months. Couple that with the fact that if you're Vietnam, as an example, your products have been tariffed at a 10% rate thus far and are likely heading up to that 20% rate. We may see another step up in tariffs collected as we go through the fall and into the winter. So I do think there's the possibility that the economy may start to slow further in the second half of this year, and the market's not picking up on it. The second question that you asked, hey, are we potentially heading for another crash again? I don't think the conditions are present right now that would lead to the type of crash that we saw in the spring, which was very sharp, very abrupt, and ultimately resolved quickly. It was something where, you look at markets and we fell, 20% in a span of a couple months. And in particular, the last 10 to 12% was in a span of a few days. I don't know that the conditions are in place for that, but this is a market that is overvalued right now. And so could you make a case that maybe it could have some struggles over a 6 or 12 month period that maybe look, something like 2022, where it took, almost 8 or 9 months for markets to fall, 20% from their peak. And then we got to, start a new bull market. That's something that I think could be in the cards, but you never know depending on how policy moves going forward. Maybe if there is no further worsening in the economy in the short term, maybe we have some other tariffs that get piled on top of this, and maybe that finally breaks things. But to this point, for being honest, the economy's held up remarkably well through the first half of the year. And so I think it is something where we have to wait and see if there's an actual worsening in the economic data coming forward.
Will this make a housing market recovery unlikely?
Well, I think that when you look at housing, the big issue that we have, it's really simple. There are too many homes priced too highly for what people can afford to pay right now. And when you look at where inventory growth is happening, it's mostly in the southeast, but trickling out towards the west also at this point. Here in the northeast, we're largely insulated from those higher inventory levels that are starting to push prices down in those parts of the country. But when you look at the northeast here, we still have very low inventory, and so pricing remains pretty high and is not really seeing much or any downward movement. So we'll see how this progresses over the next 6 months or so. But I do expect inventories to continue to build as we go through the year, and that should, at least in most of the country, start to put some downward pressure on pricing. I'm just not sure if that's going to be happening in the Northeast where inventory is so tight and there still is pretty robust demand here.
And we do ask this a lot, Chuck, but do you see any movement on the key interest rate from the Fed in the next few months?
So the July meeting's coming up next week on Wednesday, and markets are not expecting any movement there. The next regularly scheduled meeting after that is going to be in September, and this is kind of a toss-up right now. So I think we're going to see what the next 2 months of economic data show, and we should know a little bit more at that point. So there's the possibility that maybe we start to see some interest rate cuts in September, but the other thing that I point out is usually the conditions that lead to interest rate cuts, they are not ones that you want to see. It usually means the economy is worsening. And that means if you're in the market for buying a home, hey, you might start to feel nervous about your ability to pay that mortgage, and you might push that decision off another 6 or 12 months because you want to feel a little bit more comfortable. So we'll have to see how this evolves. But there are a lot of questions in the second half of the year. And the good news, I do think we're going to get some answers because again, we've had enough time for a lot of this stuff to seep into the economy. I just don't know exactly what we are going to see in that time. And so I think we have to be prepared for, a wide range of outcomes here.
When we get those answers, we know who we are going to be talking to at that time. That's you, Chuck. Chuck Zodda from the Armstrong Advisory Group. Thanks so much for the time, as always.
All right. Thanks, Joe. Appreciate it.